I'm Jermaine Williamson, Senior Valuer at VM Property Services, and today I'm your host on this episode of Financial Friday. Thank you for joining us, and we have an exciting show ahead for you. I'm joined today by two exciting individuals. Now, Winston Joseph, our manager and qualifying director at VM Property Services, is no stranger to the show. He has been on the show before, and feel free to check out that episode after today's show. There's a newcomer to the show, and that's Mrs. Marlene Taylor Reed, attorney at law, manager of securities and registration, BMBS. So, with that being said, this topic for today is simple: value it, title it. There's a lot to be discussed, and before we get into the meat of the matter, I'm just going to ask my guests to just introduce themselves. So, Winston, you want to just speak to our folks online? Just tell them a little bit about yourself.
Okay, thank you, Jermaine. So, my name is Winston Josephs. I am a chartered valuation surveyor. I've been doing valuations for over 25 years, started at the National Land Agency. I currently hold a degree in estate management from England. I also did a diploma course at UTech, and I also did 1 month training in Malaysia, where I was awarded a certificate in special property valuation. So I have a fair amount of knowledge and experience in the field of valuation.
I think fair is an understatement. That's extensive work in the valuation field, and we are seeking, well, we'll definitely benefit from those knowledge and experience earned over the years from Winston's standpoint. But I'm going to pass it over now to Marlene to just share some things about her professional background with us.
Okay, thank you, Jermaine. Good afternoon, Winston. Good afternoon, Jermaine. So nice to be here, first time on the program. And my name is Marlene Taylor Reed. I am a manager for Securities and Registration Department. I'm also an attorney, and I've been an attorney for the last 10 years. I specialize in estate planning and also conveyancing.
Awesome. Thanks for that, Marlene. So our team will be in the comments answering your questions, so feel free to post your questions there. You can also DM us directly through with a private message, or feel free to call us at 876-929-2283, or send us an email at vmpsrealestate@myvmgroup.com. Well, we're now at the important part of this episode of Financial Fridays, where I'll be posting questions to my invited guests, and they will be sharing from their experience with us how these situations or matters play out in the real world. Now, Winston, let's just establish what is a property valuation in the simplest form.
Okay, but before we get to that, Jermaine, I must say that a valuation is normally done by a certified, qualified, and experienced professional, right? So, and normally they are usually certified by the real estate board as well. All right, so for valuation is really the art and science of gathering market data, interpreting those data, and selecting from an appropriate methodology to derive appropriate market value for your property. Now, it starts with firstly understanding the needs of your client. You have to first understand the needs of your client. And then, of course, you'll do what is called data gathering, analyzing those data, and then applying the appropriate valuation technique to arrive at your valuation, right? So it is not something that can be done by everybody, you know. So it is really an area that is specific to a certified valuation surveyor.
Specialized area.
Yeah.
Yeah, man. I like that. I like how you put it there. But you have said some things that are not so familiar with the general public. So I want, without doing a valuation, tell us what are some of the things that are considered when doing a valuation. Most commonly, we hear people talk about location, location, location. But what are the other factors that you look
Right.
into when doing a
So
valuation?
right. So there are numerous factors that are considered when doing a valuation. For example, the size of any property, whether it be just a piece of land or the building itself, the size of the building, the size of the land, we have to take those into account. All right, how many bedrooms, how many bathrooms, and so on. The general condition of the property itself. So you can think about an old property, which is in a state of dilapidation versus a new property. That has to be considered, as well as parking, the availability of parking. For example, a commercial property in New Kingston, the one that has more parking would tend to go for a higher rent or even a higher value than those that doesn't have any parking at all. We could also look at the, you have what we refer to as intangible factors, such as the, what you call the
Like the view. You're referring to view, because
no
view
man,
is a
no,
big
is
thing.
that the view? Is that the view? Is the
Goodwill.
goodwill?
The goodwill.
The goodwill. The
Okay.
goodwill. So, for example, if you're valuing, say, VM, property services, VM having a very valuable
40
goodwill,
years.
140 years of valuation experience would definitely have a higher value than any other valuation company, right?
All right, I get you clear there. So, you know, it is like this is question that people will ask. How often should they do a valuation? How would you answer that?
Yeah, I would say that as long as the value of the property is in question, that's the time you need to do a valuation. So I could give you an example. So I think with the National Land Agency, every year, not every year, but every 10 years or so, they would do what is called a revaluation exercise. And they also give a person the opportunity to object to the value. And this valuation is for taxation purpose. But there are times when persons just object and they declare a value without even understanding how that value was derived. So I want to be the first to say to persons in those instances, come to VM Property Services, and we can offer you that service of preparing a valuation report for you so you can lodge an objection and you can declare a value depending on our report, you will get some form of redress.
So Winston has said a lot. It's just a lot to digest at once, but we'll get to it. Now I'm just going to turn my attention to Marlene, and I'm just going to ask you, in your practice, what are some of the pitfalls that people are subjected to when they skip over, or they go around getting a valuation? They did not get a valuation done. What are some of the things that you could be at a disadvantage?
Okay, so let me take it from the standpoint of the purchaser. So you're purchasing a property. So I look at it two ways. You're purchasing for cash or you're taking a mortgage. So if you're purchasing for cash, this is where you would find most persons will think that they don't need a valuation report. You can just pick a figure out of the hat, as the seller would do, and they would just say to you, I'm selling the property for 15 million, and you will just accept. A good attorney will tell you that it is in your best interest to have a valuation done, a valuation report will give you some very important information. As Winston, my colleague, just alluded to, is that it tells you the age of the building.
Right.
It tells you if there are impairments, so if there are termite issues, if there are cracks in the building that you may need to get an engineer report. It tells you, it gives you an idea of what the neighborhood is like, what type of development, how much the last property was sold for. There are so many important information that I think any buyer would want to know. And also, if you are purchasing, as a purchaser, there's a clause in your agreement for sale where even though you may be getting the property at a very special price, so say for example, my host here is my good friend and I'm selling the property, and I say to you, okay, I'll give you for a deal. I think it values about 25, but I'll give you for 20. But when it's sent in for assessment, the property really valued 40 million. What is going to happen is that when it is assessed by the stamp office, you are going to have to pay either the extra amount, which is for this transfer tax. You know, transfer tax is 2% of the market value. And you know that the stamp office is going to assess it based on the market value. When they do that assessment, you're either going to be called upon based on that special clause in the agreement, and I'll just read a little part of it for you. Because what happens is that sometimes we overlook this, and it is very, very important, especially for the purchaser. I seem to put my hand on it right now, but basically, in this sense, what it's saying is that if the property value is assessed for more, you are going to be called upon to pay either the extra amount or extra amount of the transfer tax or what the value is. So you would want to at least know before so you can plan, right?
Awesome.
Just also to mention as well that we talked about the impairment, whereas we say if there are cracks, you would at least want to have an idea, because the valuer, as Winston just said, if you are trained and will know exactly what are some of the things to look for. Precisely. As a lay person, you really will not know.
Right.
Even though you might think you're getting a deal, at the back end, you may find that you have to pay extra amount for other things that you didn't want aware of.
Very, very informative, very informative. And I'm still with you, Marlene, because I want you to just explain to us or tell us a few other reasons in your line of business why someone would request a valuation report.
Right. And so I was going to go into the mortgage now. So for example, if you're getting a mortgage, there's no way you can get around doing a valuation report. That is a document that will be required by VM Building Society, as would also require a surveyor's report. And we rely on that document to assist us to determine what is the loan to value ratio. What that means, how much will we lend you based on the value? Will we lend you 90%? Will we lend you 80%? Because that also drives the decision of the amount that we'll approve you for. So it is important because you don't want a situation where you would have planned based on your financial planning for a 97% mortgage, for example, only to find out that you can get only 80%. And then you realize you don't have the extra funding and you may have to pull out of that sale. And it could be a situation where there's a forfeiture clause and you could lose your deposit. So it is very, very, very important, can't overstress that you get your valuation report done so that it can help you to do your proper financial planning. We also rely on the valuation report to assist us with the replacement value. The replacement value helps us to determine how much the property is to be insured for. The property must be insured against any peril, act of God, flood, fire, and it is a valuation report that will provide us with that detail. Also, in determining the loan term, we also rely on what is the age of the building. So, for example, the age of the building is 20 years. We are not going to give you a term for 40 years, right? So even though you may be young and you can get a 40-year mortgage, if the remaining life of the building is say 20 years, we will only give you based on the remaining life of the building. So it is extremely important for you to get that valuation.
I really like that. I like that.
And just to add, before you go on, what we also commission as attorneys is that sometimes what is advised is that before you go ahead and make your deposit, there are attorneys who would advise that you get a valuation report done so that if there are issues and you want to pull out of the sale at that time, it is easier for you to do that without, end up losing any funds.
So with that said, you can see that the valuers and the attorneys work closely together. But I'm going to ask Winston to just share on this question about some other reasons outside of a mortgage a valuation supporting a mortgage application why someone would request a valuation.
Right. So I know Marlene touched on insurance valuation,
Yes.
but and usually it is done when you're taking out a mortgage. But separate apart from that, you might own your property already and you want to insure it.
Yes.
Right? You can actually do a valuation just for insurance purposes only. The rental industry is booming in Jamaica, and persons are not aware that they can actually do a valuation for just to determine the market rent.
Yeah.
Same way you would find the market value, you can actually do a valuation to determine the market rent. Because what you don't want to do, you don't want to run that risk of under renting your property, and in the case of market value, you undersell or you sell the property for less than its true value, or you probably end up trying to get more in a sale than the property actually value. So those are reasons why you should actually do a valuation.
All right. So I have here, and I'm just going to turn to Marlene to just give us some more information on this valuation for probate.
Okay. So, so let me deal with probate. So probate is where you have the deceased would have made a will.
Yes.
So the attorney on behalf of the executors would make an application to the Supreme Court for a grant of probate. Or you may have a situation where this deceased did not make a will, so the deceased would have died intestate.
Yes.
And an application would have had to be made to the attorney, to the
Administrator.
Administrator General for
Yes.
letters of administration. Now, you may have a situation where it's a contentious situation. The beneficiaries are not happy, and there is fuss and contention. Could be about the real property. And so it is in the interest of the executor who is standing in the shoe of the testator to ensure that a valuation is done for transparency, because remember that the executor is a fiduciary. The executor has to account to the beneficiary. And sometimes, more than the beneficiary, sometimes other family members who get involved. As I say, especially if it is contentious. You may have a situation where sometimes the executor is called upon to do more than one valuation because there is so much contention. So you may have one beneficiary saying, do I believe it valued $10? One saying, no, it valued 20. And so you want to make sure for transparency, for proper accounting, that you produce two valuations and you may come to a middle ground. And I find this happening more so in the case where the benefit, the property is to be sold and the proceeds is to be shared among several persons. The executor, I always advise that the executor ensure that they get a valuation report done by a reputable company, and I stress on that, and that is why I would suggest our two valuers here. That's why I recommend VM Property Services, a reputable company. We have, you would have heard Winston, years of experience, as well as Jermaine, and they are quite efficient. I have used them in my practice, and I found them quite efficient. So you may also have a situation where the testator did not leave a will, and there are real properties. That also I would recommend that you have a valuation done. Valuation is also done in determining what is the value of the estate. The value is what we rely on to determine the transfer tax, to determine any other duties to be paid, the attorney's fee, the accountant fee, any fees is predicated on the value. And so you would see how very important it is for you to have a valuation report. We usually start with the valuation, because the attorney would need to calculate the various fees, to give
Yes.
the executor what is an estimated cost of what the amount will be to see whether the estate has the funds to to bring the
To resolve the matter.
to
Yeah.
distribute the assets.
Awesome.
But
Awesome. You want to?
if I may add, Jermaine,
Yes.
because one of the other reasons that came to mind as to why persons would need valuation, because there's this thought that valuation is just for the value of the property, but the valuation report, it provides more than just the value. It provides a lot of information on the property itself.
Yes.
So there are a couple of cases I can remember right now where persons living overseas,
Yes.
they own property in Jamaica, but they have no idea, no clue as to what is actually happening on the property today. And so they will call us and they will ask us to undertake those valuations for them. Now, in a couple of cases that I can remember, the valuation report revealed that ownership changed by adverse possession. Person living overseas didn't know that. Right? So the valuation report provides more than just the value of the property. Right? So it's always good to have one done.
Yes,
All
and
right.
sorry, just to add as well, that's an excellent point because when you do a complete valuation, it also provides you with a copy of the title. It tells you if there's a mortgage, and it gives some very important information that can really guide you. And
Right.
and as Winston just said, a number of persons only believe that you do a valuation when you are getting a mortgage or you're thinking about selling the property.
Right.
But you can do it for different reasons,
Different
as you say, for
reasons.
insurance purpose as well.
Yeah.
As you can see, the conversation is heating up, and my guests they are trading thoughts, and it's just a beautiful occasion here. But Marlene, in your statement about valuation in for probate, very often we see on the request for those valuation, requesting the value as at the date of death.
Yes.
Just explain to me why is that important?
Alright, so what you find that may happen is that we need it at the date of death because that is what we would state on the revenue affidavit that we supply to the or we submit to the stamp office.
Yes.
So the date of death, the value is what will be used at that date because remember the transfer tax is 1.5%.
Yes.
So if it's there are cases where the application is made until maybe 5 years after the deceased
Correct.
death. So if you're going to be making the application 5 years later, you know that you're going to have some escalation
Yes.
in the value. But if you do it 5 years at the date of death, you can save some funds for your client in taxes.
Awesome. And I want to get all the information I can out of Marlene because I am familiar with valuation being requested for bail applications.
Yes.
I want you to just enlighten us on that.
All right. So you may find a situation where persons may choose to use their property to secure a bail application. And here again, I recommend my colleagues here from VM Property Services, where they are quite efficient in providing you with a valuation report in a short time. So if the court believes that the property that is being used to secure this bail application, that the value is not adequate, so if the clerk believes the value is not adequate, they may commission a valuation report. And they'll commission a valuation report to be done by a registered valuer, right? That is licensed with the real estate board. Once they commission that valuation report and that is received, then the valuation report is presented to the court along with a certified copy of the title or the title itself, and that is held until the date of the court hearing.
Good stuff. We have it there. I don't want to really exhaust Marlene too much, but I want to. I think a lot of our viewers would really like to understand the importance of a valuation in a divorce matter.
Okay. So in a divorce matter, similar to the estate estate matters is that you may again have a contentious situation where both parties can't agree. So you may have a situation where the husband decides that he's going to pass his share in the property to the wife, or vice versa. In that case, you may find that in order to establish what is the monetary value of the shares that you're passing or the interest you're passing, you have a valuation done. So the husband, because you may have a case where the husband may have to go to the bank to take a loan. To know how much that loan is, you will have to get a valuation done. So say if the property value 50 million, because usually it's 50-50, that's the presumption, unless the presumption is rebutted. 50-50, 50 for the husband, 50 for the wife. The husband knows that he's going to have to take a loan for the 25 million, right, in order to pay the wife for her share. Or if you have a situation where the property is going to be sold on the open market, so say our VM Property Service is going to be selling the property on behalf of the parties, right? You're going to want to make sure that you have a valuation done so that you establish what is the true market value of the property. So, or you may also have a situation where the court orders a valuation, or the court may order two valuations because there is contention and you can't decide, just for you to find a middle ground for the value. So it is very, very important. And sometimes, as we say, the court gets involved and order, commission this valuation to be done.
Very good, very good, very good. There you have it. And there's many more to come in this episode of Financial Friday. Winston, I'm going to turn my attention to you now. Even though you went ahead and you injected some energy in this in our presentation here, but I want you to just tell me, of all these requests and these purposes that we have mentioned so far, are there any difference in the application of your technique? And if so, you could just highlight two examples and what are the difference in technique when doing those valuations?
All right. So generally, the information in the report tends to be the same for all valuations, but the purpose of the valuation is key.
Yeah.
So if, for example, you're doing a valuation just for insurance purposes, it's a matter of researching and consulting with the QS, quantity surveyor, to determine a cost, a reconstruction cost for the building or the property. And you, of course, report that in a valuation. If, for example, you're doing a valuation for sale or purchase, then you would probably need to do market research, data gathering to see what similar properties are being sold for, and with adjustments, of course, and then determine a value for your property. So basically, and then you have what is called the projected value.
Yes.
So the projected value is futuristic. So it speaks to the value of the property on completion of, say, an addition or on completion of a development. So you have bare land, you intend to develop that land into a two-story house or a single story. The mortgage institution who's going to be investing in this development would want to know what is the value of this asset on completion of this building. And so that valuation would have a future value in it. It's a sort of project, we call it projected value.
Yes.
Right? And so basically, those are some of the differences that you would find in the different valuations.
Well said. Well
And of course, for probate, depending on the date of death, you would need a historic valuation.
Yes.
You know, so you have the projected and you have the historic. Right.
I get you.
Yeah.
Very often when a valuation report is done, sometimes the reader would confuse costs with value.
Right.
So they would look at the replacement value, as Marlene would call it. We would say the replacement costs. And in many occasions, let us choose an area like Mandeville, the replacement cost would be higher, significantly higher than the value. And they are a little confused there. How would you advise them?
Well, the both should not be confused. The market value and the replacement cost of value should not be confused. They are not the same, right? They can be equal,
Different techniques you use to
right?
derive them. Yes.
Right. There are instances where they are equal, but it should not be said that they are the same thing,
Yeah.
because the insurance value or the replacement value is the cost to rebuild, to rebuild that building. If the building were to be destroyed by a hurricane or by fire, you want to know the cost to reconstruct that unit. All right, so that is different. But market value is derived based on market data and some amount of calculation, of course. So they are not the same.
All right. Well said. Well said.
There's
And
a question here, my host.
no problem.
If I just want, so say I have a property,
Mhm.
and I just want to get a valuation to derive at a value to sell. Is there a different technique that will be used for that valuations, different from if you are doing one for I'm purchasing the property? I just want to sell, so I don't want a full sum valuation. Maybe just want to get an idea of the value.
Right. So if you're selling as well as purchasing, is basically the same. Right? You're selling or purchasing is the same, because if you're selling, you will do the valuation because you want to know worth. You want to ensure that you're not losing as a seller. The buyer, on the other hand, would also want to ensure that they are getting value for money. But it's the same technique,
Same
principle.
Yes.
Yeah.
I want to just add to your response about the replacement cost that it is also sensitive to the size of the building.
Right.
Yes. So that can cause the difference between the value and the replacement cost there.
Right.
All right. So we are moving on smoothly. So, Winston, what information do you need from the client, the requester, when they are requesting a valuation? What are some of the stuff that you would want them to provide you with upfront to help your speedy completion of it and your research?
Right. So there are some basic information that we require from our clients, separate and apart from the deposit that they will have to pay for the service. Of course, we would want to get the address of the property correct, and we would want to have a contact number, name and number for the persons who is going to show us the property. And if the property has a registered title, we would love to have that as well. But if the property is unregistered, we would like to have, for example, a survey diagram outlining the boundary and the size of the property, as well as property tax ID. We call it the valuation number. So those information are critical for us to even start, separate and apart from the deposit that is required.
I want to add to that the property tax ID or the valuation number you refer to is usually found on the property tax invoice that you would receive from the tax office.
Right.
So you can look for that number and share it with us if the property is unregistered.
Precisely.
All right, and unregistered refers to properties that doesn't have a registered title.
Right.
Am I correct, Madam Attorney?
Correct.
All right. So, I know you have said a lot, Marlene, but I want you to just say, how would a valuation assist with transfers that are being submitted to the stamp office for assessment?
Okay. So our valuation report is very useful for our assessors at the stamp office, especially for those properties in the country where persons normally just pick a figure out of their hat and say, this is what I'm selling for. When you submit a valuation report with your documents, with your agreement for sale or your transfer, it is more likely that the stamp office will accept and rely on that value. If you just put a value or you just put a price, and because that's what you think it's to be sold for, that's what it values, the assessor reserve the right to visit the property where they believe that the value is not looking so right or they don't think it's correct, they've reserved the right to visit the property, to do their assessment, and they are going to derive a market value. And whatever it is that the market value that they state on that document, that is what we as attorneys will have to be guided by. And then, as I had said before, whatever that extra amount for that for the new value or the new assessed value, you as the purchaser will be called upon to pay that extra amount, and you'll be given about 5 to 7 days to find that extra. So it is very, very important that if you are not sure of what the property value you decide to sell, you are not sure, I would advise you that you think of contacting VM Property Services to get a valuation done.
Wow. There you have it. We could go on and on and on, but we want you to contact us. We want you to contact us for expert advice in the area of real estate. So feel free to call us at 929-2283. Of course, you're going to put 876 in front of it. Send us your email at vmpsrealestate@myvmgroup.com. And you can also go on our social media page on Instagram and send us a private message as a direct message as well. So, this is your episode of Financial Fridayz, and we have again explored real estate. And today, I just want to say thanks to my guests, Mrs. Marlene Taylor Reid, attorney at law, and Mr. Winston Joseph, chartered valuation surveyor. Thank you for your time, and we look forward to seeing you again.